Hey, welcome back to the show, everyone. Today, we're diving into the fascinating world of financial analysis, and we've got quite the earnings report to dissect.
Absolutely. I'm always up for a good financial deep dive. It's like exploring a hidden treasure map, trying to figure out where the gold is, or, well, where the profit is in this case.
Exactly. So, the company we are looking at today is Bharat Electronics Limited, or BEL, a major player in the defense sector in India. What exactly do they do?
Well, BAL is a Navratna PSU, which is a fancy way of saying it's a really important public sector undertaking in India. They basically design, manufacture, and supply a wide range of electronics equipment and systems primarily for the Indian Defense Forces. So think radar systems, communication gear, electronic warfare systems, all that high tech stuff.
Right. So, they're a big deal in the defense industry then. That kind of makes you wonder about their financial performance, doesn't it?
Oh, absolutely. Now, according to their recent unaudited financial results, their revenue from operations for this quarter was 5,75,612 lakhs on a standalone basis, which is about 57.5 billion rupees. That's a pretty hefty sum if you ask me. So
And how does that compare to last year?
well, compared to the same quarter last year, which was around 4 lakh 13,669 lakhs, they've seen a significant jump. That's roughly a 39% increase, which is quite impressive.
Wow, that is some serious growth. What about their profits? I mean, revenue is great, but what about the bottom line?
Okay, so the profit after tax or PAT for this quarter, the standalone figure is 1 lakh 31,606 lakhs, which translates to a roughly 13 billion rupees. This is significantly up from 89,330 lakhs in the same quarter last year, showing a growth of over 47%.
That's really solid growth on both revenue and profit fronts. What do those numbers look like on a consolidated basis, when you include all their subsidiaries?
Good question. On a consolidated basis, the revenue from operations was 5,77,069 lakhs this quarter. The profit after tax comes in at 1,31,160 lakhs.
Okay, so the numbers are slightly different, but the trend is still upwards, right?
Exactly. The consolidated figures show a similar upward trajectory, although it is pretty close to the standalone figures. The thing to remember is that BEL has several subsidiaries like BEL Optronic Devices and BEL Thales Systems and an associate company GEBEV PLT Ltd.
Okay, that makes sense. It's good they're transparent about all that. Now, I'm thinking about those ratios, the key financial ratios that give you a deeper picture.
Ah, the ratios, they're like the secret sauce of financial analysis. For instance, we can look at their earnings per share or EPS. The basic and diluted EPS for this quarter is 1.81 rupees on a standalone basis, up from 1.22 rupees last year.
So essentially, for each share, they're making more money. And I guess that's great news for shareholders.
Precisely. On a consolidated basis, the EPS is 1.79 rupees this quarter, up from 1.17 rupees last year. It's worth noting, though, these are not annualized figures.
Right, that's an important point. So, what about some other ratios? Like, how efficient are they at managing their expenses?
Well, when we look at expenses, we see that cost of materials consumed is the largest chunk of their expenses. A lot of it is related to defense equipment production. That's something to keep in mind when we evaluate the overall financial health.
Yeah, that's a pretty big expense. How is their overall expense management compared to previous periods?
If you look closely, the total expenses have increased, but they haven't outpaced the revenue growth. They've managed to control their expenses pretty well, actually, which contributes to that profit increase we talked about.
That's good. They're not just making more money, but they are also managing their spending well. I mean, that's crucial for long term stability.
Absolutely. It's like having a well tuned engine, it needs to be efficient. We also need to look at their cash flow to see if they have enough cash to fund future growth.
Right. So, how was the company's cash flow looking? Were they bringing in enough to cover the bills and maybe invest in future projects?
That's a very important aspect of the financial health. Unfortunately, the cash flow statement wasn't in the provided document, but looking at the increased profits, I'd assume their cash flow is fairly healthy.
Okay, that's a bit of a bummer. Hopefully, it's something we can explore further later. So, let's talk about their market. It's mentioned they are into defense production, right?
Yes, and they've been exempted from the requirement of segment reporting. This is because of their defense production activities, which is interesting. I mean, it sort of gives them a different kind of status, you know?
Yeah, that's quite a unique situation, isn't it? It highlights how crucial they are to the country's defense sector. I'm guessing there's some regulatory considerations that come with that.
Indeed. Also, they mentioned that they've analyzed the existing contracts and agreements with companies based in Israel, and that, in their opinion, there's no material financial impact despite the ongoing conflicts.
That's actually very important information to disclose. It shows they're aware of global events and their potential impact on the company.
Right. It's like acknowledging a potential storm on the horizon and letting people know you've got your umbrella ready.
Exactly. Now, looking at the report, I see they mentioned a board meeting. When did that occur?
Oh, yes. The board meeting to approve these results took place on January 30th, 2025. It started at 11:30 a.m. and wrapped up at 1:45 p.m.
So it's a fresh and recent report. It's always good to have the most up-to-date numbers, so we're not looking at ancient history.
Exactly. The auditors, Rao and MR, chartered accountants, also did a limited review of both the standalone and consolidated results. This review is not an audit, which means it provides moderate assurance.
That's an important distinction to make, right? It's like a checkup, but not a full-blown physical.
Precisely. They didn't find any material misstatements, though, which is definitely a good sign. It's like getting a thumbs up from the doctor, but you still need to eat your vegetables.
So they got the green light. That's reassuring. Now, what about the company's overall outlook? Any thoughts there? I mean, where might they be headed?
Well, based on the earnings report, BEL seems to be on a really solid growth path. The defense sector is also seeing a push towards indigenization, which could mean even more opportunities for the company.
That makes sense. With the push for local production, a company like BEL is likely to gain more traction.
Exactly. The press release also mentions that their order book is at a whopping 71,100 crore rupees as of January 1st, 2025. That's a very large backlog of work, a good sign for future revenue.
So they've got a pretty solid pipeline of future projects. That's fantastic. What kind of impact will all of this have on investors?
Well, these positive results might attract more investors, but disclaimer, we advise investors to check with certified experts before taking any investment decisions. The stock price might go up if the market sees this performance as a positive sign.
Absolutely. You need to do your research. So overall, it sounds like a pretty good report.
Yeah, overall, the numbers are pretty impressive with significant growth in both revenue and profits, both on standalone and consolidated basis. BEL is definitely a company to keep an eye on.
Yeah, they seem to be in a strong position right now. Any final thoughts before we wrap things up?
Sure. BEL's recent financials show impressive growth. Their expense management seems effective and their order book is substantial. But, continued performance monitoring is crucial.
Yeah, financial analysis is like a marathon, not a sprint. It's a continuous process. Hey, if you're finding this analysis useful, why not like, share, and subscribe to our YouTube channel for more engaging content?
Absolutely. And don't hesitate to drop us a question in the comments if there's anything you would like us to dig deeper into.
So that brings us to the end of another insightful financial breakdown. What do you all think of BEL?
And, what other companies do you want us to cover? Let us know in the comments.